Hello everyone, welcome to my YouTube channel. So markets are actually defying the gravity and reaching its all-time highs and closing at the all-time highs. So all of this is happening on the backdrop of a strong, resilient economy. So we got a lot of macroeconomic data this week. We got GDP numbers. We got a lot of Fed speakers speaking. So despite all of that, we are digesting all of these news in a very nice way. And today, Friday, we actually closed at the all-time highs. So this strength in the markets and this upward movement in the markets is not unwarranted. It is because of a lot of fundamentals into play. And I want to discuss everything in this video, ranging from macroeconomic data to a detailed technical analysis of the charts. So without further ado, let's jump on right into the analysis and let me show you what I have today in detailed charts. Let us start with the macroeconomic section, wherein I discuss some of the fundamentals and some key events that happened this week. So starting with the GDP numbers, we had the GDP numbers released and it was pretty much in line with the expectations. US economy is growing at a modest pace. It is also far exceeding the expectation in some key matrices. Also the consumer is strong right now. So if you look at the personal consumption expenditure for last month, it was pretty strong. So the notion that US consumer is tapping out apparently is not visible in the data yet. So we'll have to see till how long the US consumer can sustain these levels of spending, but so far they are not holding back. Also, the unemployment numbers are also coming in line with the expectations. There is no major change in the jobless claims and everything. So we are also good on that front. Also, we have a lot of Fed speakers speaking this week as well, and all of those Fed speakers did not have a game-changing comment or anything that can spook the markets. And lastly, and surely, I also had a look at the CME Fed Watch tool in order to see what the market is pricing in currently. So currently, the market is pricing a first rate cut in the month of June. So clearly, higher for longer is the narrative when it comes to the interest rate cuts. So people are not very optimistic in terms of Fed cutting the rates prematurely until and unless they see a very severe cracks in the economy. So the higher for longer narrative is pretty real as of now. So starting this summer, at least in the June meeting, the Fed is set to cut the rates in terms of probabilities which are given in the CME Fed Watch tool. So that is it from the macroeconomic section. And now let us analyze, in terms of technical analysis, and let us start with the weekly time frame charts. Let me discuss the weekly time frame analysis, and then I will also show you key support and resistance levels and my reasons for selecting those levels. So without further ado, let's jump on to the charting. So this is the weekly chart, and if you can see over here in the detail, last week we actually took a support at anchored VWAP, that is the white line over here. And then starting this week, we took the support of 5-day EMA, that is the blue line over here, and then we closed above this resistance zone. So since 1 to 3 weeks, we were having a good resistance area over here, and we finally broke out of that resistance on a weekly time frame, and this is the highest close in the entire formation. So there is actually no real resistance in a near side over here. So if you can see over here, the actual real resistance is sitting at 18,500, and the ultimate resistance is sitting at the top of the Bollinger Band, that is almost 19,000 levels. So I personally think that this Fibonacci ratio, that is 1.272, is going to get tested and is going to touch next week. So remember, next week we do have this contract switch, that is from March contract to June contract. So we have this contract switching date. So next week it would be crucial, and normally from my experience, whenever the contract switch happens, there is never a very huge sell-off. So because what happens is the institutions are actually transferring the contracts from the current month to the future months. So when this rollover happens, they are supposed to buy the new contract. So an imminent correction is very highly unlikely. So what can cause the correction is the next to next week we have the inflation data. So that can cause the correction. But so far the next week looks very stable. So that is it from the weekly time frame. The ultimate area of support is the top of the Bollinger Band on the weekly time frame, and the immediate area of support is the blue line, that is 5-day EMA, and the ultimate area of support is going to be this anchored VWAP, and the final area of support is going to be this Bollinger Band. So I highly suspect that we are not going to test the ultimate support, but there is very high chances that we do test the 5-day EMA, that is this blue line over here, on the weekly basis. So now this is my take on the weekly basis, and now let us go to the daily charts to see what we have. Coming on to the daily time frame, it is more interesting, and it was a spectacular close on this Friday. So we have closed at the all-time highs, and we have closed and broke out from the range that we were in since few days. So let me show you all of this in action in the charts to actually gauge a better idea of what is happening. So I will also discuss the support and resistance levels on the daily time frame. So let us now go to the charts. So as you can see over here, this is the daily chart, and we started the week on Monday over here. That is, we had a huge upcoming up day on the Nvidia earnings. So remember that over here after market close, Nvidia reported the earnings, and then we had a huge gap up day, and then we also closed at a very high formation, that is 3% up day. So after that 1, 2, 3, 4 days we actually consolidated sideways, and we actually digested these gains that happened overnight. So after digesting these gains, finally on Thursday we actually had a real up day, negating the last 4 days of selling. So once we did that, today, that is Friday, we actually broke out of this range. So this was the area of resistance, and once we closed above this range, we actually had a tremendous day today, that is on the Friday, and we actually was about to test the top of the Bollinger Band. So a spectacular close on this day. I don't see anything suspicious on this rally, because it is accompanied with high volumes. So if you look at the volume yesterday, it was around 672k contracts, and if you look at today's volume, it is almost 30k contracts. So a lot of volume has been occurring in this rally. That means a lot of participants are participating in this rally. So there is one thesis behind it, is there is a lot of catch up that is being played by institutional players. For a long time all the fundamental people were bearish, and they were arguing that the market is trading at a higher multiple and it is premium and whatnot. But honestly speaking, price is price, and the verdict is very clear. These entire tech rally is driven by a lot of things. That is AI, you may say efficiency, you may say layoffs. Whatever the reason may be, it is beneficial for the companies and not beneficial for the employees. So in the world of capitalism, this is what creates a huge rally. I can go on and on with the examples, like Meta announcing buybacks, announcing dividends for the first time. So every corporate company is trying to be lean and trying to do better business in terms of efficiency and in terms of fundamental books. So that's what is driving the growth of the markets. It is predominantly AI, there is no question about that, but the price action is price action, and we have to trust the price more than anything else. So this is the highest close in the entire formation, and there is a very high chance that we test the top of the Bollinger Band, that is 18,500 levels. Once we do test the 18,500 levels, then there is a lot of scope of upside rally, but at least in the near term, the resistance is sitting over here, that is on the daily basis 18,400, but my high conviction is we will test 18,500 because that is the immediate resistance on the weekly basis as well. So it is a sign of confluence. So the resistance is sitting at 18,500, that is the immediate resistance, and the final resistance is over here, that is R2, and that is 18,700. And when we talk about the support, the first support is sitting at the blue line, that is 5-day EMA, and the ultimate support is sitting at the year-to-date anchored VWAP, that is which is I'm going to discuss in the next section. So that's my take on the daily time frame. It's looking, the price action and the volume both are looking very, very bullish, and I don't see a structural flaw in the price action and neither in the fundamentals. So the next week is going to be stable and probably bullish. The risk to reward and the probabilities are in the favor of bulls currently, so and so does the price action. So yeah, until and unless these levels get violated, there is no point in thinking or having a bearish bias. So yeah, that's my take on the daily time frame. And now let me show you the anchored VWAP charts, because that will clear a lot of noise. So yeah, let's go to the anchored VWAP charts where I show you who is in control and why am I saying this. A lot of people might know the VWAP, but I use anchored VWAP on the daily time frame to actually gauge like who is in control. So if you see over here, let me go to the charts. So this is the anchored VWAP charts. So basically it's a pure naked candlesticks and volume, as you can see over here, and the lines that you see over here, that is the blue line, the green line, and the red line. All of these lines are anchored VWAP mounted at a certain point. Now, those certain points are decided by a significant event or a change in the tectonic shift between the buyers and the sellers. So if you see over here, I have mounted this blue anchored VWAP over here specifically because this is the day where the Nvidia announced its earnings and we reversed the course of bullishness again. So this was the point. The green line that you see over here, I mounted it over here because this was the start of the month, that is month to date anchored VWAP. So right now, and this is the longer duration anchored VWAP, that is year to date, and that is in red color. So what do I mean when I say this? So in the short term, that is in the blue line, if you see over here, whenever the price is above the anchored VWAP, it is considered bullish and the sentiment and the buyers are under the control. Whenever the price is below the anchored VWAP, it is considered bearish and the sellers are dominant. So if you see over here, the short-term anchored VWAP, that is this blue line, the price once the price reclaimed this blue line, we had a very nice rally. Also, if you look at the monthly like anchored VWAP, that is month to date, then the price action is also above that green line as well. So right now, looking at the anchored VWAP charts, the sentiment and the control is in the hand of bulls. So we are bullish until and unless the price action goes below one of these lines. So right now anchored VWAP charts are looking very bullish, and that is my conclusion from this anchored VWAP charts. Now let me go to the other section of the video wherein I discuss the economic calendar for the next week and the significant events that you need to be mindful of so that you can take really good informed decisions. As you can see over here, this is the economic calendar for the next week. I wanted to bring these two events to your notice. First is Federal Reserve Chairman Jerome Powell is going to speak on Wednesday, and on the same day we have Joel's job numbers getting reported. So Wednesday is going to be very critical, and the traders need to be very mindful while trading in that session of Wednesday. And then finally on Friday we have non-farm payrolls data release. Normally this non-farm payrolls data release gets released every first Friday of the month, and normally it is in the pre-market session of 5:30, that is 1 hour before the cash open. So there is a lot of volatility that happens when the non-farm payroll data gets released. So be mindful if you are someone who is going to trade intraday on the pre-market timing. So those two data releases and these two, like Wednesday and Friday, are going to be very, very crucial for the markets, and you may expect a lot of volatility. But apart from that, Monday and other days are going to be be relatively quiet and relatively calm. So that's the key for the next week. I don't see a major shift in the momentum of the markets, or I don't see a major crackdown that is going to happen. So the next week is going to be very stable and a slow grind upwards. But next to next week is the CPI data release, so that needs to be paid attention to, and that can be a next catalyst for the markets to correct or at least to pull back. So that's my take on the forecast of the next week with the economic calendar. So to sum it all, to actually sum up the entire video, there is a very high likelihood for us to get tested in the 18,500 levels on the Nasdaq futures contract, and then also the VWAP charts looks very bullish. So the theme of the next week is going to be this any weakness needs to be bought. So if you are someone who is a trader and who actually understand technicals, all the rise dips in the rising support should be bought. So that's the key takeaway from this entire video. So I hope that you are getting a lot of value in the content, and I hope that you are learning a lot from these videos. So make sure that you keep a note of these levels and you think about the strategy moving forward. So that's my final message to you. And as always, feel free to like, share, and subscribe. And please, I tell everything as I can, but my main motto is to keep learning, keep growing, and keep trading. So be a student and learn from everybody and evolve yourself into a really great trader. So that's the goal of this channel, and I will continue to provide quality educational financial content. And feel free to engage with me in the chats or in the comments, and feel free to send me an email. So yeah, I would love to engage with you guys. And until next time, thank you for watching, and I'll catch you guys in the next video.